Hello and welcome to another update video about gold. I didn't want to make another video today. I'm super busy with all sorts of things and I rarely had as much work with all this stuff as I have these days. But it is basically because there is so much happening in the markets. In the end, I decided to do another video because I don't really want you to fly blind in these markets. And today I wanted to look at gold. I might do a few other videos as well because, you know, things are happening and things are getting very, very, very interesting and important. So it played out so far exactly as forecasted. We hit today the wave 3 target range. You know, you might remember that in one of the last videos I made the bullish breakout scenario the primary expectation based on various factors. So with gold, there is now a real chance that we had the low in here. We hit exactly this support level. Yeah, that it was one of the key levels calculated based on the just the Fibonacci extensions of the waves that were coming down here. Gave you one level. First of all, this green area was formulated and defined already back in February when we were around $1,980, I believe. This down here, this wider area between 1600 and 1720 as a reversal area for this larger degree fourth wave. We came into it. I then was able to specify the 1680 level for you. That was one possible target within this wider area, and then the other one was down here. We didn't break the 1680. No, we saw a massively bullish reaction to it, then moved higher. Until here, it was all still possible to be bearish, but when we then moved higher than the 50% fib retracement and we broke out of this descending trend line, I told you that I have to make now the bullish scenario, the primary one, only with, you know, 60-40 at the moment, 60% probability for the bullish one, because I need to see a few more things to make this, to get the probability a bit higher. But anyway, I made you aware that this absolutely could have been a wave 1, an impulse, a first impulse, this a corrective wave. Then I gave you the target range here for the wave 3. And again, we hit perfectly the 1.618 fib extension, the first target that we want to that we normally expect for a wave 3. You can see that here. Yeah, 1805. We got there with the accuracy of cents, maybe. Yeah, we reached it. And we saw now quite a strong reaction to the downside. To be fair, that reaction to the downside is a bit too strong, a bit stronger than I expected. So we need to take a look at that now. But as long as we stay now within the defined range for the wave 4, it's all good. So as I said, already outlined in the last video, I would now expect a wave 4 retracement. This is the wave 4 retracement. This can come down all the way. We can currently see that this can come down all the way to 1756. If it retraces any more, then this does not necessarily put into question the bullish scenario, not necessarily, but it means that we might not have a 1, 2, 3, 4, but it might just be a 1, 2, 1, 2. Yeah, so basically, yes, that we are in a third wave, so that we indeed have this wave count, a 1, a 2, and a 3, but the 3 will be somewhere up here, and that we have within this third wave only just now completed a first wave and we're coming down in a 2. So this will then be my expectation as long as we stay above 1708. For now we can see it as wave 4, and the ideal retracement for this wave would be between the 23.6% fib level at 1782. Now we already reached that, so I'm not gonna put that target range from here. I'm gonna put it from the 38.2% fib level all the way down to the 50%, so between 1768 and 1756. We're coming down quite strongly, so that's a bit stronger than I would expect it. Yeah, a bit too impulsive, to be fair. But that could indicate that we get, an ABC pattern here anyway, where you would normally have the A wave a bit stronger than the C wave. Yeah, so basically that would come as a zigzag pattern then, where the wave A is actually an impulse. So that would be here the A, B, C. Yeah, so that's how we can look at this. But it should not move below the 50% fib retracement. If it does that, it will be a 1-2, a 1-2. That would in the end be a more bullish scenario, because it would cascade all these waves further to the upside. But in the short term, it would mean a stronger retracement. So yeah, for now, everything's following here the primary expectation. Only, not problem, but what I need to observe here is the strength of this sell-off at the moment. It is quite strong, quite a bearish reaction, but again, it could just be a 5-3-5 pattern, so an A, B, C, where you have 5 waves in the wave A, which is an impulsive wave structure, therefore we can come down quite strongly actually. So again, in a wave 4, we would expect the retracement to end here. If it goes lower, it would be a wave 2, and it should not go below 1708. If it does go below 1708, we have to unpack the bearish scenario again. And please understand, it's only a 60% probability at the moment to the upside, and a 40% that we still make another lower low. To what would need to happen to increase the probability for the bullish scenario? What I would want to see is a first impulse. So basically the 5 waves complete to the upside as outlined here on the roadmap, and then an ABC wave down, making a higher low in a 3-wave structure in a wave 2. That is when I would increase the probability of the bullish scenario to possibly, 70 or maybe even 75%. All right, and that's currently my view about gold. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out my main channel, More Crypto Online. And the link for that is in the video description. Thanks a lot for watching. Bye-bye.